Hello everyone, this is Alexander Nikolov. Let's take a look at the US stock markets. I haven't done a video for quite some time because the market was in downtrend and then the price action was quite choppy, and I waited to see some clear signs of a new trend before making a video. Let's take a look first at the S&P 500. This is the hourly chart of S&P 500, and what you can see here is that the prices have been trading below 1298, basically 1295, 1300 area. So this is the area for resistance. And right now the prices are still below this resistance, actually right at this area. But the most important thing on the US stock market recently has been the price action in Nasdaq. If you take a look at Nasdaq, you will see that here the market has been much stronger, and actually yesterday the market finally broke above this 2255 level. This is the area of strong resistance that has been intact for quite some time, and yesterday the market broke above this level. A case of an inverted head and shoulders patterns can be made, and also this is a clear sign of bottoming formation. This is kind of a basing, and today the market is rallying strongly after the breakout. So here the daily chart, notice here that the daily chart has become bullish again. Why? Because the prices briefly undercut the March low, found support right at the important 2185 level, and near the 200-day moving average, and after building a base, the prices broke higher. So this is positive. What's more here is that, as you know from our analysis, short-term analysis on the website, I'm looking here for a broad sideways consolidation that is going to take a few more months between the February high and the March and June's lows. So I think that the prices are likely to now rally toward the 2400 area, toward the most recent top. Then another pullback will most likely occur in August. So the ideal scenario is a rally in July and a pullback again near the current lows, near the current levels, back in again in August. Only then in September or in October a new uptrend will be able to start. This is my opinion right now. So bottom line is I do not expect a sharp move higher directly from here to new highs, but most likely a move to levels close to the highs that we have already seen. Let's go back to S&P 500. This is the hourly chart. As you see, the prices are right at the 200-hour moving average. So if the current strength continues, a breakout will be seen here as well. And going to the daily chart, again, similar picture. The prices found support just above the 200-day moving average, actually right at the 200-day moving average, and just above the March low. So again, a case can be made that a broad sideways consolidation from the from the February top is in place here, and again, I think this consolidation is likely to develop as a triangle. So this is wave A, this is wave B. The decline from early May stop to June's low was wave C, and now the market is starting to move higher in wave D. That is likely to take at least 1 month to develop. So that's my outlook. Going to the weekly chart, the weekly chart actually remains positive, and only a firm move below the March low. Remember, I was looking for a brief undercut of the March low, but so far it didn't occur, and it looks like the market is ready to turn higher now. But even if the market breaks lower, below the March low, if this breakdown is just for a few days, the market declines to 1220 area and then bounces back strongly, this will not change the overall bullish view of the on the weekly chart. The weekly chart will turn negative only if a serious decline starts from here that undercuts the 1200 area, 1200 level, and if this move down is sustainable. So far, there is no such evidence. And what's more, notice that the weekly stochastics here is now oversold. So this is a good indication that the market is likely to reverse again on the upside because the overall trend is still higher. If the trend is up, when the stochastics gets oversold, it's usually a buy signal. When the trend is down, we do not rely on such oversold conditions and on such oversold buy signals. But when the trend is up, which is the case since March 2009, then we should respect these low readings of the weekly stochastics. Two other indicators. First, let's take a look at the volatility. The volatility has risen a bit since early May, but the surprising thing was that even though the market was declining, the volatility remained subdued for quite some time. Then there was a sharp move higher in the VIX index in mid-June. The VIX index shot to 24.5 area and then pulled back. So this qualifies as a spike buy signal, similar to the one that was seen in mid-March of this year. But the problem here is that the trend in VIX is still higher, as you can see from the chart. So I interpret this trend as higher, and as such, notice notice today. Today the market is rallying sharply, and the VIX is of course down, but not much. VIX is not down to 18 level or 17 area. It's 19 and a half. So the VIX is not down a lot today compared to the previous occasions when the market rallied after a spike in the VIX before. So right now the VIX is not telling very positive picture. Actually, I interpret this indicator as neutral. It still cannot rule out, actually, based on the VIX interpretation, I cannot rule out another decline in the stock market. But again, this decline, even if it occurs, even if this decline occurs, it will not be something that is sustainable. Most likely, it will be simply a sharp move lower to 1220 area and then a sharp reversal to the upside. And the other indicator that, as you know, we follow is the SPY TLT ratio. This is the stocks divided to bonds ratio. And as you can see here, for the past month or so, the investors actually preferred bonds over stocks, and as a result, this ratio declined. It declined below the 20-week moving average. This is the weekly chart, so the blue line is the 20-week moving average, but found support near the 50-week moving average, which is still rising. So overall, the trend here is higher. If this ratio continues lower from here, but actually it bounced right from this 50-week moving average. If it were continued lower, then that would have been a negative sign. But now I think that this ratio presents a positive picture for the stock market. So in conclusion, I think the stock market has put in a bottom, or nearly so. The strength in Nasdaq actually tells us that a low is already in place, and a move higher toward the May lows, the May highs, excuse me, is likely to be seen in July, followed by another retreat in August. Overall, I continue to expect a broad sideways market for the next couple of months. Thanks for watching, and I'll be talking to you again later.